Oil slips as fears of imminent OPEC Plus output cut fade. Oil expenditures fell on Wednesday, taking a breather from a close to 4% surge yesterday, on receding fears of an approaching output reduce with the aid of the Organization of the Petroleum Exporting Countries and Allies, a collection known as OPEC Plus. Global benchmark Brent crude futures fell 40 cents, or 0.4%, to $99.82 a barrel with the aid of 0337 GMT, after growing 3.9% on Tuesday. The U.S. West Texas Intermediate crude futures settlement was down 27 cents, or 0.29%, at $93.47 a barrel, having jumped 3.7% the day prior to this. Both contracts soared on Tuesday after the strength minister of de facto OPEC chief Saudi Arabia flagged the possibility of deliver cuts to balance a promote it defined as schizophrenic, with the paper and physical markets becoming increasingly more disconnected. While Abdulaziz bin Salman's remark might also have completed greater than putting a ground below crude expenses, we expect it to comply with the regulation of diminishing returns, until it is followed up via more indicators or motion from OPEC Plus to restrain output, said Vandana Hari, founding father of oil market evaluation issuer Vanda Nasdaq, VNDA Insights. With OPEC Plus already delivering approximately 2.8 million barrels per day less than its monthly target, the mathematics of reducing production is going to be more complex than normal, now not to mention the politics of it, Hari added. Potential OPEC Plus manufacturing cuts might not be coming near and are possibly to coincide with the return of Iran to oil markets have to that U.S.A. clinch a nuclear cope with the West, 9 OPEC sources informed on Tuesday. A senior U.S. reliable informed on Monday that Iran had dropped some of its most important demands on resurrecting a deal. Tuesday's rally became overdone as many buyers knew it might take numerous months for Iranian oil to flow into the international market, even though an agreement to revive Tehran's 2015 nuclear deal become made, meaning OPEC Plus might not trim output so quick, mentioned Kazuhiko Saito, leader analyst at Fujitomi Securities. Still, there is not lots room for the marketplace's drawback due to strong heating gas demand for the winter, he stated, citing that the latest rally in the U.S. heating oil marketplace and surging herbal gas prices boosted expectations for stronger heating oil demand and tighter crude supply. U.S. fuel expenditures shot above $10 for the primary time in about 14 years due to a surge in expenses in Europe, in which tight resources persist. Underlining tight supply, U.S. crude stockpiles fell by approximately 5.6 million barrels for the week ended August 19, consistent with market sources bringing up American Petroleum Institute figures on Tuesday, in opposition to analysts' estimate of a drop by 900,000 barrels in a ballot. But gasoline inventories rose with the aid of about 268,000 barrels, while distillate stocks increased by approximately 1.1 million barrels.